Hello traders and welcome to Market Update. It's Tunapan here, founder of Master Markets Illustrates Conference and Traders Open Day. So here we are on our market update for the year. It will be the final market update for the year before we wind down and stop our trading activities from 15 December onwards because of the volume that will start to diminish inside the market. However, of course, we got large bank of videos for you guys to go through on our blogs, and we'll keep sending you quality educational material even after we stop the market update for this year. So it'll be the final one for this year. So let's go through this and on our usual format, which is going to be on one market topic for today. So today, I'm just going to recap on trend variations. Okay, so I'm going to be looking at trend variations here. So let's take a look at what they are. What are trend variations? You see, traders, most traders usually have a misconception about this. They just think there's only one trend variation, which is just your typical higher highs and higher lows. In fact, we always tell our traders, and our clients that in fact there are 6 trend variations that we have classified, all because we have quantified the highs and lows with the help of institutional quant traders. So what are these trend variations? What are the 6 ones? Okay. Now, I won't be going through all the 6, but one thing that I'll be going through is 2 of the 6 trend variations, which are good for riding the trend. Okay, so in terms of the 2 of the 6 trend variations, we are looking at one. So what are they? So what are the 2 trend variations? So one is what we call the variation 4. So the fourth variation of the 6 variations. So variation 4 is where you got the typical trend which most people know, which is higher highs and higher lows. All right, important word to note is it's and over here. So you can see that over here we got a what we call a reference high, and when it then comes down and this high gets confirmed, you can see that that high is a higher high in reference to this high. Okay, and also remember, it's you got to compare the lows as well. So where is your reference low here? That's your reference low there. And then as it bounces up over here, then that is what we call a higher low. Okay, so that's when you get your higher high and your higher low. So that's called your variation 4. Remember to always identify your reference high and your reference low, which would be the most recent highs and lows. Right? That's variation 4. Now let's go on to variation 5. Okay, 2 of the typical trend variations which are in established trend. So you see over here, we have, let's say, a downtrend happening, and then finally then we have a reversal. Important point to look at is this high, which we will call it as the reference high. Now once price takes out that high and then comes down and confirms this high, now you have a higher high compared to the reference high. Remember, you can only say something is higher than something if you have a reference. It's like saying someone is taller than, if someone is taller, if to say that someone is taller, you need a reference person of a certain height, isn't it? It's always in comparison, right? Theory of relativity, isn't it? So that's the one over there. So you can say now that there's a higher high in reference to this high. Then finally, then when it bounces off, you can then say that that low is a higher low compared to this low, which is your reference low. So you can see that in this variation, you still do have a higher high and a higher low, which fulfills the uptrend equation. It's just that the pattern is a bit different. Look at here, right? So it's more like, an ascending continuation pattern. Over here, it's a reversal from a downtrend. It's the first cyclical pattern that you're having in terms of a variation 5. Okay, a higher high and a higher low. Okay, so those are what are the trend variations. Variation 4, and this is what we call the variation 5. Okay, these are the 2 trend variations you can look at in established trends. All right, good. So those are the 2. Now, why would that be important? Why would trend recognition be important for those 2 trend variations? Because you're trading in momentum. Okay, you're using momentum to ride the move. Okay, momentum based strategies, that's one strategies that you guys can do. Now, how do you trade them? How do you trade these momentum trading strategies? Remember that in every strategy, you need your entry, you need your initial stop loss, all right? You need your trade management, which is your trailing stop loss. And finally, traders, you need to know your exit as well. Where are you going to come out of? Okay, it's very, very important. Entry, initial stop loss, trailing stop loss, finally exit. All right. And eventually, once you have all of this, then you need to test and see if your numbers work out in the long run, which is your cumulative result, which is it turning it net profit or net loss? Okay, very, very important. So, for example, let me just give you an example of a very simple strategy which we do cash in 4.0. So over here, so let me just turn on the smart money elite indicator. Let me just put confirmation dots on. So if I were to do that, so let me see over here. That is the indicator there. Let me just put in, let's see, 3,000. That should do it. And there you go. That's that. Let me just turn off the indicator for a while on the cash in, and then we can put this one in here. Let me see. There you go. So you got the dots over here then. So all these dots mean is that that's when the confirmation came in to confirm that bottom. Now you remember the variation 5 that I spoke about. You see over here, so what you got is a downtrend here, right? So let me just put that down. So yeah, there you go. So you got a downtrend there, and then eventually it then broke out and then came back down. Remember this diagram that I showed you before? So it's like that, and then after that, then it came back down here. So then you got your variation 5 over there, okay? So that's your variation 5 over here, and you got the confirmation of this low, you got the confirmation of this low at this bar over here, okay? At this bar over here. So that's where the low then got confirmed over there, as I'm pointing to that bar over here, as you can see, right? So at that point, simple entry. See, remember, this is the entry part of the strategy. Then we enter on the close as the low is confirmed. All right. The initial stop loss, one way that you can test, we can do a very simple initial stop loss where it's at for the low of the bar, where the low of the bar is. And then finally, the entry can be on the close, which is we can just signal it by a blue line over here. And that's pretty much that. And then finally, do remember that not only you need the initial stop loss in place, then you need a trade management, which is how are you going to trail your stop loss. Simple trailing stop loss can be that, until I get the reversal signal on forward. That means the reversal dot. So in this case, I would not trail my stop until this retracement phases are over. Okay, so at this point, because we did not get a dot confirmed on this high over here, then after that, as it clears that high, then I can then trail my stop, and I can keep going like that as we move forward. So right now we're just broken even on this position. Now, so that's one way. And then finally, not only your trailing stop loss is important, you need to know your exit as well. Remember I said entry, initial stop loss, trailing stop loss, and then finally your exit, right? Your exit can be based on a certain number of pips, and that's why you need to know your open equity data. If you do not know what that means, definitely go through all my previous recordings, our previous recordings that we have put, tons of data on open equity. So this is a very simple way of how we can get our target data to be, okay? And then based on that, you can do your 20% open equity, 70% open equity, so on and so 4K. So that's what we can be doing, and that is it. That's you got a very simple strategy that you guys can go and test just for variation 4 and variation 5. Do your homework. One thing that you can also do is, I've shown you variation 4 and 5 for an uptrend. Go and do and draw it out on a blank piece of paper in terms of a downtrend. I mean, those are the kind of stuff I used to do, and I was trained by my mentor as well. I would be so excited, after I learned that. I would just take out a blank piece of paper, just use a pen, just keep drawing, like down and up and all that, so that it becomes ingrained in your mind such that you can spot them really easily. Okay, it's a very simple momentum based strategy that you can be doing. Okay, and if you want more and more trades, then you can also expand the instruments as well. Put on the stocks, put on the commodities, put on the indexes. You can do whatever ones that you want to. Okay, good. So I've shown you this now. So do definitely go and look into this, digest this information. Recap. We just looked at trend variations. What are they? Variation 4 and 5. Why trade them? Because they are momentum strategies, right? And you're trading the momentum, therefore you got a plus point towards them or fueling your profits forward. And how do you trade them? I've shown you what are the important things for the strategy, which is entry, initial stop loss, trailing stop loss, and then finally exit. Okay. Sadly, in the market, everybody just knows how to enter, but they don't know how to trade manage, nor do they have an exit where your full profit or loss is realized. Okay. And finally, most important, which we released the video as well, think cumulative. Just because you got that strategy and it just wins on one trade doesn't mean you're a winner, or even on 5 trades. You got to test it over 3-5 years and see whether it proves to be profitable. All right. Okay, good. So I guess that's pretty much that on this particular market update topic. Now, in terms of our performance so far, so let's take a look over here on our elite journal over here. Let me just give you the breakdown over here, what's been happening. Elite room primary runners, OE, we are down minus 1.63%. Primary runners elite, we are down minus 1.61%. And so therefore, overall minus 3.24% down. In terms of money bars 3.0, let's take a look at here. On the live trading room journal, what we got is minus 1.08. And in terms of cash in 4.0 TSL is what we have. We have minus 1%. And then eventually on cash in 4.0 one day exit, we have minus 0.77%. A bit of a drawdown because of the lower volume in December as well. So minus 2.85% over here on live trading room. Overall, a bit of a drawdown, minus 6.09% on both rooms is what we have. But overall, remember that the momentum full base trends will be back up again going into January. So you have to be patient. Remember, patience, consistency, and law of numbers to pull you into positive equity terms. Okay, right. I guess that's pretty much that from me on this market update video. So definitely do reflect on all of the points that we have talked about. The final thing I did remember finally also do is the market update, isn't it? So let's take a look at all the different markets and what the updates are. Let me just finish off with that. As our format is dollar Swiss right now downtrend, a bit overextended. That's why we took on money bar trades as well. This is a PSWB coming up here, could be a signal of buying pressure coming back in. Dollar yen in a bit of a consolidation. I'll wait for either this low or for this high to be taken out. We don't have that yet. Cable, yes, so we have this low been broken out. It's an uptrend, but I would feel that there's an open equity to the downside at the moment. So we'll see how that carries on to be. Euro dollar, on the other hand, you can see that it's uptrend at the moment. It did do a signal of an upward move over here, as we can see. Attempt moving up. I would wait for this high to be cleared, or we would look for this low to be cleared to the downside. So either one of it, to be honest. Okay, so we'll see how that plans out to be. Aussie dollar, on the other hand, you can see over here that open equity is diminishing to the upside. It's a strong uptrend, so I would wait for this low first to be cleared to see some signal of a move to the downside. Okay, so that's what I'll be looking at. GBP yen, yes, there is more open equity to the downside. Downtrend just cleared this low over here, so we'll see more momentum coming into the bottom. Bitcoin, on the other hand, taking a bit of a pause at this point over here at 18,000, 20,000 mark over there. If it, of course, goes to confirm this high, I would say more open equity to the downside before it continues, probably with strong momentum to the upside. Brent oil, on the other hand, you can see it's an uptrend over here, strong upward trend going forward. So we'll see more open equity to the upside probably. Gold, on the other hand, still a downtrend at the moment. If it does take out this low over here, then of course more open equity to the downside, which I would believe so, continue on with its downtrend. On the other hand, FTSE uptrend as of now, fully going momentum on the upside. Dow Jones uptrend as well, bit of consolidation, so I'll wait and see if that high gets confirmed or not. Then I would say more open equity to the downside. S&P would be similar as well. And silver, on the other hand, there is a downtrend over here. You can see open equity, if it takes out this low and confirms the high, I would say more to the downside. Also, if it takes out to the high, then I would say more momentum to the upside. Wheat, on the other hand, you can see is a downtrend over here. And in terms of that downtrend, we can see that if we want to continue with downtrend, take out the low over here, or if it reversal change, this high would be taken out. Okay, but of course you want to follow the momentum. There's a typical variation 4, as I mentioned over there. Once that high is confirmed, that could be a possible way for us to start looking into downward momentums. All right, I guess that's pretty much that from me on this market update video. And as we say towards the new year, have an awesome Merry Christmas and a Happy New Year as well. And for some of you who are looking to get into trading and increasing your alternative source of incomes and diversifying your asset allocation, especially for some of you who are looking into property or already in property and also want to diversify your assets and minimize your risk and increase your returns, then definitely financial trading and looking at the financial markets is a really, really great point to start into the new year. Definitely get in contact with us or look at the tons of free material that we got over there in terms of our trader starter pack, our trade like a master video links, and get in touch with us. We'd be more than happy to serve you going forward into the new year and making it one of the best years ever for you and for your financial future and your financial freedom forward ahead. All right, that's all from me. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.